Good afternoon, ladies and gentlemen, and welcome to the ECSC Group PLC final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish, where it is appropriate to do so, responses on the Investor Meet Company website. We will send you an email to notify you when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll and be grateful if you could give that your attention. And I'd now like to hand over to Lucy Sharp, COO, Gemma Basharana, CFO, and Ian Mann, CEO from ECSC. Good afternoon to you all.
Afternoon. Okay, thank you very much, Mark, and welcome everybody. Those of you that attended the last one we did, which was the first one on this service, and thank you very much for Mark for making sure everything runs smoothly and helping us do last-minute testing, especially because we threw a spanner in the works with a microphone that wasn't working. So, but we're there now. So I'm going to take you through the slides. We do welcome questions as we go along, and we will try and answer questions if they're relevant to the section that we're on at each point in time, and then we'll pick up questions at the end if we haven't answered them as we go along. So I will progress through the next slide. So a little bit of information there about the three presenters, and of course you can access copies of these so you can read that at your leisure. So I'll hand over to Lucy, who's going to just run down the sort of things that we do if you're new to us as a company. So over to you, Lucy.
Thank you. So this slide just shows a selection of our services, and that's a mixture of managed services and consultancy services. So the consultancy side of the business, we are doing testing, so that's kind of hire the hacker. So clients hire us to try and break into their systems, and then we fix the holes or advise them how to fix those things. And the other side of consultancy is compliance. So that's helping with standards and security frameworks and helping clients get into a position where they can go for certification on those. The other one in the top left there to mention is incident response. So clients can call us if they've had a breach or a suspected breach, and we can help them investigate what's happened and help them shut it down.
Okay. Thank you very much, Lucy. And then the next slide is some images from our Security Operations Centre. So I'm sat here in our studio that we do events from, and across the road we have the Security Operations Centre in the UK, and those are images from there. So this is where we are monitoring people's systems, and I've got a slide coming up about how our combination of artificial intelligence and real people helps to discover breaches. And then we have a mirror facility in Brisbane, Australia. That's one of the distinctive things about us for our size, that we have that global presence. And that's really important, having something in another geographic location, because hackers tend to work out of hours. So it's no good just monitoring security in office hours. And if you try to do that all from the UK, then you'd have to pay people to work night shifts. And that's not a good strategy for retention and retaining good staff to require them to work nights. So we chose Australia as a high quality location, good qualified people. Also, it's a trusted location in terms of regulatory regime. And also we employ Australian and New Zealand nationals only, so we don't ship cheap people in. So it's not about saving cost. In fact, costs about 30% more for an analyst or engineer in Australia compared with the UK. So it's all about ensuring quality of service. So this is a slide around some typical numbers for one client. So it helps you understand a little bit how the artificial intelligence element of what we do works. So this is a single client for a single month in 2020. It's pre-COVID, so it's a normal type month. So they have 1,276 devices, so sort of medium-sized clients. They generate 3 billion logs. So every IT device is capable of generating logs that record what activities happened on that computer. And that applies to servers, it applies to network devices, desktops, laptops, anything is capable in IT land of generating a log. So 1,200 devices in a month generates 3 billion logs. So you can see we're talking about some quite big data here. The artificial intelligence helps narrow that down to 259 alerts. And if somebody tried to do this themselves and tried to buy somebody's artificial intelligence, then that's about as good as they'll get. They'll get lots of alerts, but out of that, there's actually only one breach for this client that month. So you then need people to make sense of it. And anyone who tells you that their artificial intelligence is so good that you don't need highly skilled people to interpret the results either is lying because they want you to buy their software, or they don't understand it. So those 259 go to the engineers, the analysts. They then have raised 59 requests with the client to gain some more information. So those are things that we are very confident are not a breach, but we'd like some more information because we want to enhance and tune the system. There's 5 things that we're suspicious of, and we tend to be very cautious. So these probably aren't breaches, but they need investigating. But it's sort of next business day investigation. So reasonably urgent, but you don't have to work weekends and get up at night to do it. But then 1 is a confirmed breach. And that means we will be ringing people at 2 a.m. on a Sunday morning and saying, you have a problem. And then either the client can respond or they can use our incident response service to help them resolve the issue. So that's a nice sort of a diagram of how the numbers involved and how analysis of computer logs is currently the most effective way of detecting breaches. Most people don't have a system like this. Most people are very poor at detecting breaches, even large organisations. If you read the Information Commissioner's Office reports accompanying the record fines recently, for people like Marriott Hotels, their breach was going on for 4 years before it was discovered. The British Airways breach was going on for many months before it was discovered. The biggest breach internationally last year was Solarwinds, global IT company, again, went on for many months before it was discovered. So organisations really struggle with detecting breaches early and then responding appropriately. And the quicker you respond, the less dangerous the breach. So very important, an element of what we do. So moving on to some financial highlights. So obviously COVID dominated last year, and we're going to talk about our COVID response and the impact it had and where it impacted us. The other side, there's 2 sides of the business. We've got managed detection and response, the managed services, and then we've got the assurance services, the more consultancy type services. Managed detection and response, generally 3-year recurring revenues. They grew by 22%. So a typical year for us sees 20 to 30% growth in that area. So very much it was business as usual from the point of view of managed services last year. But we did get an impact in the assurance division and also in incident response, which might be a bit counterintuitive, but we'll talk about that. Because you might have expected more incidents as a result of COVID, and I'll go into that. So we did see a drop in revenue, but it was in the consulting, the assurance side of the business, and I'll show you that. So we did see a revenue drop for the whole year, but then it quickly recovered. So it really was concentrated in Q2. We achieved adjusted EBITDA profit of 0.4 million. That is contrasting with a break even the year before. And that level of profit was actually what was forecast pre-COVID. So that was in line with the forecasts for the whole year. We also built our cash, that we were quite low on cash at the start of the year. And with precaution, we decided to raise £500,000, which was fully subscribed by investors, both existing and new. And we thought that was a good cautious approach when it was uncertain what government support, for example, might be available. But we utilised the furlough scheme, took government support for paying things like VAT late. And so we got a little bit of government support that's still left in there, but we are now generating cash. We continue to win new clients and we continue to develop the partner program, and I've got a slide on that. And our investment in artificial intelligence, similar cash level to the year before, but the percentage, because of a slight revenue dip, that increased. So those are the highlights. So let's just go into more depth on the revenue breakdown. And the most significant thing there, which you'll see later in the KPIs, is the dark blue managed detection and response, and how we've grown that in line with our strategy from about a quarter of our revenue to getting close to half our revenue. And that was a strategy delivered through the IPO and the investment in the security operations centres. And then the next slide shows the investment after the IPO and then return to profit, and it's got the latest market expectations, the latest forecasts are in there. So the forecasts are showing us returning back to reasonably strong growth. We tend to average about 20% a year, and a slight dip in profit this year because last year we didn't do any investment in growth in terms of new staff. We could see quite early on that 2020 wasn't going to be a growth year because of COVID, so we weren't investing in bringing new people in, but we've resumed that recruitment and investing in growth now, which is why you've got a forecast showing slightly less profit this year, but then growth again in profits next year. So I'll hand over to Lucy, because it was Lucy as COO who led our COVID response in terms of delivery. So I'll let Lucy talk about this slide.
Thank you. So at the start of 2020, we took quite swift action because we anticipated that the virus could obviously impact consulting, particularly quite significantly, because the vast majority of our consulting is done on client sites. I would say at that time, only about 20% of consultancy was done remotely. So we took, let's say, swift action. We reduced costs by reducing the consulting team somewhat, and we also took advantage of the furlough scheme. So if you want to move to the next slide here, these graphs here show that the short-term impact was in Q2, and that was as we were finding our feet of re-engineering the services and moving them to be deliverable remotely, but also clients finding their feet of working remotely and moving their businesses remote as well. But you can see from the graph that worked very well for us. We were able to turn that around and deliver everything very well remotely, and we were back to pre-COVID numbers by the second half of the year, and we were very strong at the end of the year. So you can also see in the bottom graph there, that reflects the rechargeable expenses to clients, because we weren't on client site and traveling and such, then those expenses fell off.
If you take just the revenue dip in Q2 in assurance division and the lack of expenses for Q2, 3 and 4 and add it together, it comes to 400,000, and the revenue dip we saw for the whole year was 242. So you can see there's underlying growth there, and it was a very short-term dip. There's a question I want to address here. Did any of our clients fall victim to the Solarwinds breach? So the Solarwinds breach was probably the biggest headline breach last year, because Solarwinds is a global IT company. They produce software that I think it is the market leader in network monitoring. So you go into most larger companies and they will have systems and screens that are monitoring the health of their network, and that the leader is Solarwinds. Solarwinds were hacked. The general consensus is by the Russians, and they hacked into their systems and then were quite devious in that they modified the Solarwinds software so that, not particularly to target Solarwinds, but when Solarwinds then issued new software to their customers, that software connected back out, once it was installed, back out to the Russians, which allowed them to hack into lots and lots of organizations. In terms of our clients, we had lots of clients using Solarwinds, but they were partly saved by the fact that the Russians had gained access to so many thousands of companies that they were quite picky in who they attacked. And they generally concentrated on US large companies and US government organizations. We did have one client that was confirmed that they were part of the breach, but were able to solve it very quickly. So our work there was mainly about helping people protect themselves and helping to diagnose whether they'd had a problem. That also links to a recent Microsoft breach of their email exchange server software. And Microsoft have admitted that software, the underlying software code for that system, was breached because of the Solarwinds breach. So the Solarwinds breach led to Microsoft getting hacked, and the people who stole things from Microsoft did steal the underlying code to the Microsoft Exchange system. And so it's probably likely that by stealing that code, they were able to work out how to hack that system. So we've had lots of people in the last few weeks who were victims of the Microsoft Exchange hack. What wasn't helped is that Microsoft released a tool for you to assess whether your server had been hacked, and that tool doesn't work properly, and it falsely reports at least 10 times more people that have been hacked than really have been. So a lot of the work we've been doing is helping people confirm that they haven't really been hacked, and it's just a Microsoft tool that's telling them that they have. Helpfully, the Microsoft tool says, you've been hacked. Why don't you move all your email into the Microsoft cloud? Because obviously it's going to be a lot more secure under Microsoft's care than looking after it yourself. So yes, we've been dealing with that in the last few weeks. So just moving on to the partner program. We set an objective of recruiting 200 sales partners in 2 years. That was to the end of last year. It obviously slowed because of COVID, but we're satisfied with the 150 plus, and we're now focusing our strategy this year is building the effectiveness of that partner program and helping them to sell. So the partners have two things they can do. They can take an opportunity, refer it to our sales team, sit back, let us do the work, and get a referral fee. They can equally engage their own sales team, and these are typically IT resellers, value-added resellers, IT managed service providers. They can engage their sales team to try and sell it. That turns out to be a bit more difficult than they might have thought. So most of them are just passing us things, which is fine. But our objective this year is to carve out the ones who've got real potential and skilled sales teams that they can sell to just boost the volume of sales that's happening. So the partners are very happy with what we do. They're very happy with the fact that our sales conversion ratio, proposals to sales, is currently over 70%, and historically that's a normal number for us. So they see a really high success rate. They get very good feedback from their clients with the quality of work we're doing, and that's starting to feed through into client acquisitions and revenue. You can see 13% of the new client wins last year came from the partner program. And overall, it's contributing to about 4% of revenue. So that's nicely on track, and that's building very nicely. There is a question here about, can you talk about the competitive impact you are seeing and the intensity of companies operating in the market? There's lots of competition, and it's a very fragmented market. But a lot of that competition are new entrants. They don't have their own technologies that we do, so we've got a technology advantage. We've got an experience advantage because of the length of service. We've got lots of blue chip clients, so we've got lots of reference clients. We've got a very good reputation, and we've got that ability to deliver globally from Australia and the UK, so that we can do things on a proper 24/7 basis. So we've got lots of advantages. So we tend to operate at the more premium end of the market, where quality of service is important, and we're not really interested in competing on price. There's lots of new entrants offering cheap services. We firmly believe, as you'll understand, that there are certain things in life that you buy quality and not on price. And we think cybersecurity is one of those things where you want a quality service. You don't want to skimp on cybersecurity, because the result, if you skimp on cybersecurity, is large fines, damaging breaches, etc., etc. So here are indications of our top clients. We don't disclose client names. We don't talk about what we do for individual clients. But you can see here that we got a very diverse client base across lots of sectors. We're not got a reliance on any one client. As you can see, in a typical year, clients sometimes get into the 5 to 10% region. But we've got a very diverse client base, and that's proved to be very resilient. So throughout COVID, our total bad debt for 2020 is £5,000, and that's one client, Arcadia, that went bust. So I can name them not a client anymore, and they don't exist anymore. So that's just one client, and our total bad debt for 20 years of service is less than £50,000. So that's a real testament to the quality of what we do. And also we had very good collections last year. I'll let Gemma give us the figures for collection days for last year and then for this year.
Yeah, so the collection days for last year was 41 days, and then the average for this year is 39. So we've continued to be strong on collections. So no, it's really good.
So we're very happy that we weren't impacted by difficulties that clients were having. So for us, COVID was really a 1 quarter impact, and we've re-engineered what we do, and it's really back to business as usual for us. Even though we're operating in a remote mode, we're still doing all the same services and back to a level that exceeds the pre-COVID level. I'll let Gemma talk about some of the KPIs. We've got these that we've established over many years, which really help you see the key performance measures, so you don't have to wade through the accounts trying to work it out for yourself. So I'll let Gemma talk about the critical ones here.
Yeah, so one of our most significant KPIs is the growth in recurring revenue as a proportion of total revenue. So we've gone from 29% to 43%. And this is an area where we can get more leverage, and which means that we can continue to add new managed services without the need to increase the infrastructure. So you can kind of see that in the gross profit margin as it's gone from 53% to 73%. And we can continue to push that up in the future as we bring in more efficiencies. Our order book has stayed the same at 2.6 million, which may be surprising as our recurring growth was 22% in the year. But this was down to, we had a number of 3-year renewals came up, and due to COVID, they opted for a 1-year extension. But going forward, we feel we'll go back to the 3-year renewals, and that will start to grow in the future. Assurance gross profit margin went up slightly to 58%. We don't expect this to go up very significant in the future. We don't see it to go any higher than 60%. We have to carefully manage utilization. We can't push consultants to work too much because then they'll leave. So it's finding that balance with that one. And then we've continued to invest in R&D. Last year, we put in as much as 2019 despite COVID. And going forward, we'll continue to invest in that between 10 and 12%.
Thanks, Gemma. Louise has asked a good question. Can you raise the return given that the business is labour intensive, and to what extent AI and software and our partner program can overcome this aspect? So as Gemma says, the rise in profitability really comes from the managed services. That's where we can get more margin as we automate more and become more efficient. The partner program actually is quite agnostic when it comes to revenue, because we've designed it in such a way that if a partner refers business to us, their fee is approximately our marketing cost if we were to try and get that client. So we don't really mind whether we've achieved the client directly or through the partners. And then when it comes to the partners selling, the larger fee that they make when they sell equates approximately to our cost if our sales team do the sale. So really from a profitability point of view, we're really agnostic whether it's come from the partner program or not. There is an advantage in the partner program that we're not investing in building our sales team, but in terms of headline costs and profitability, it's deliberately designed to be the same. So market opportunity. There's a government report that came out last year that valued the UK market at 8.3 billion. We think that's got quite a broad definition of cybersecurity, and it's certainly not cybersecurity professional services, which is our area, and it includes people buying equipment, hardware and software and things like that. But it still just shows that there's a very big market, and the market is growing quickly. 9% is the figure that Plimsoll put on that annual growth. That seems about right. So we typically grow by twice the market rate. So we've got real good market opportunity, and it's largely now being driven by the bigger fines that are coming from the GDPR legislation, which, although that was a European regulation and still is, the UK has adopted their own version of it, which mirrors it pretty much word for word, and to ensure that we're still compliant with the EU regulation, so it doesn't cause friction in terms of disclosing and moving data in and out of the EU. So that will still be important moving forwards. And that, interestingly, is where the big fines have come from. You put into a historical context, when I first started working in this field, a breach of data protection resulted in a £50 fine. And now we've got say Marriott Hotels, 18.4 million. So it really shows how the market has changed and the level of penalties if this goes wrong for people. So the investment case is we've got a really good market, getting better every year. We've got a really good track record of organic growth. So Thierry has asked if we're, because of the intense merger and acquisitions in the UK, why we stay listed. So we chose being listed really because we didn't want to accept offers to sell. We thought, great opportunity, we can do a lot more. The current investors didn't want to sell out. And we have said publicly on many occasions that we will one day be bought off the market. That's almost inevitable. And we get approaches really pretty much every month. But it's really early days for us. There's a lot more we can do. And for us, being listed works. It allowed us to raise money. It allowed us to build the new security operations centres and invest the proceeds. It allowed us to raise money last year when we needed some more cash. And it's also a nice proposition when you're going out to clients in terms of a trusted partner, that we're long established and we're one of the few PLCs. So there's a lot of transparency there that you might not get with other companies. So people are interested in the provenance of companies looking after their cybersecurity. There are lots of instances of technology companies having very close contacts and liaisons with governments, and being a public company with transparency, that works from a trusted point of view. So a good market. We've got that track record of organic growth. We're now back into profitable after we've invested the proceeds of the IPO. Very experienced management team. We've got that 24/7 capability in terms of the Australia and the UK, and we're the leader in artificial intelligence. So lots of new developments going on in artificial intelligence. So our R&D budget tends to go into three areas. We have our internal systems. We don't use systems out in the cloud. We don't put client data out under anybody else's care. So everything's done in-house. So we keep developing our own internal management systems. We then develop our underlying technologies, the platform that we build things on, and then the artificial intelligence components, which is obviously central to that 24/7 detection service. So we've got a long-standing proven technologies with our own intellectual property. And you've seen proved in 2020, because of the resilience in terms of COVID, that we've got a very diverse client base. We track ourselves against other quoted companies. So on AIM and in NCC's case in the FTSE 250. So we track our performance against these. You can see out of that group, there's only 3 that are in profit, including ourselves. So some of these are still investing more than their revenue in terms of losses. So we're one of those that can turn this into a profitable company. We were profitable before we floated. Once we've gone through the IPO investment, we're back into profit. So that's who we compare ourselves with. And if you're looking to invest in cybersecurity, then in terms of UK based, that's your group that you can look at and choose between. And that's where we compare our performance against. We call them comparators rather than competitors, because it's a very diverse market with lots of new entrants, and we don't come across these very much in terms of competition. NCC being the exception because they're so big, we do come across them. So we have lots of other competitors, but the fact that our sales proposal to sales conversion ratio is over 70% shows that in many cases we're not up to over competition, or we deal with that competition very effectively. So in summary, good return to profit, positive cash flow, strong recovery in assurance, just that one quarter. So once we got into H2, strong recovery there. Good uptake in the partner program, so that making a nice contribution now. And then that focus on growing managed services, it's despite COVID, a nice 22% growth in recurring revenue. So we keep innovating, keep looking at new technologies, and keep with our organic growth strategy. People ask us about acquisitions. We look at acquisitions, but we're cautious about dilution and cautious about value from acquisitions. It's very much a seller's market in terms of acquisitions. So we are cautious, and we don't need acquisitions. We don't need acquisitions to grow. We're very good at acquiring and retaining clients. and also very effective at recruitment. So we don't need to do acquisitions to grow. So thank you very much. Thank you to the people who've asked questions as we go along. I will hand back to Mark, who I think is going to go through other questions that were pre-submitted as well.
Indeed, thank you. Thank you very much to Ian, Gemma, and to Lucy. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be made available via your Investor Meet company dashboard. And like we said earlier, you will receive an email notifying you when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. As Ian highlighted, investors did have the opportunity to pre-submit questions. I've got, I think there's 8 to post to you, if I may. The first one is, how important is business reopening their physical offices and allowing contractors on site for your assurance business? Assuming office life returns to something like a pre-COVID normal in the summer, do you see this as being an important boost for the assurance business?
Thank you for that. It's a good question. For us, that side of the business is back to normal in terms of revenue and the work we're doing. It's obviously been delivered remotely, but our consultants tend to be based from home, even though they spend a lot of time on client sites. And our salespeople traditionally are based from home because they spend time on client sites. I think the change to on-site will be client-driven. I think if we're engaging with a client and everybody's together in an office in one room, we'll want to be there. That's more effective. But we're not going to travel and charge expenses to visit a site and find everybody's on a Zoom meeting. So it's very much client-driven. My feel is that we won't go back to exactly the same. I think many organisations are introducing remote working and flexible working. So I think we'll end up with a hybrid. I think we'll end up with a mix. I'm old school. I quite like being on site with clients, but I find working through video conferencing to be equally effective. And we're flexible. We've shown we can deliver every single service, with one small exception. There's an element of our payment card industry certifications that have to be done on site because you have to physically verify things for retailers. So those retailers, they've mainly been shut anyway because of lockdown. So we couldn't actually go in and do that. But it's a small part of what we do, but some of those assessments got delayed. But other than that, everything can be done remotely.
Thank you very much indeed, Ian. Just bear with me just 1 second. The second question that we had pre-submitted investors is, why did working from home not to seem to have caused a spike in cyber attacks or business for ECSC in the incident response in 2020?
Okay, well, it did and it didn't. So when COVID hit, I publicly said we're going to see a lot of incidents because the majority of incidents we deal with are based on people moving to home working and cloud working. That was pre-COVID. So people push things out into the cloud, don't understand the security weaknesses of the cloud, and make mistakes. And people are more likely to personally make a mistake when they're working from home and they're not got colleagues around them to ask advice and guidance from. So I said, because of lockdown, we're going to see more incidents. And I was completely wrong. In Q2, we just saw virtually no incidents at all. And it was our CTO who corrected me and said, well, Ian, you've forgotten one thing, which is that people don't know they're having incidents. People cause incidents and it takes them months to discover them. So the incidents are happening, Ian, we're just not seeing them yet. And he was right, and he's our CTO because he usually is right on everything. And then in August, we saw more incident response income than the whole of the year to August. So it did pick up. But for us, incidents, a lot of incidents we deal with very quickly and very efficiently, so they can just be in a few £100s. But every so often we get a major incident that can be into the 100,000, 200,000, $250,000 level. So the up and down of incidents is the one part of the business that is just, look, it's good luck for us when somebody has a major incident, it's bad luck for them. But it's the one bit of the business that we have very little control over. And our job is to minimize an incident, is to get the client recovered as quickly as possible. And it is in our interest to do that because once a client's had an incident and we've saved the day, they'll buy a wide range of services from us. So a recovered from incident client is a client for life. And that's one of the great things about that service, that it cements us as the trusted partner, and clients don't want to do things without our advice and guidance following that point. So we did see an uptake of incidents, many incidents, but they just weren't the big ones that we have periodically.
Thank you, Ian. I know you touched on the Microsoft server attacks. The question reads, are you seeing additional business from the recent attacks on the Microsoft Exchange server?
Yeah, we've been very busy with it. Lots of clients, but we've streamlined the process. So I think the first one we worked all night and to verify that they hadn't been hacked, and we managed to automate that and get it down to about a 3-hour response. So we've dealt with lots, but most of it has been helping people confirm that they haven't been hacked and helping them confirm that they fixed the problem. So when you get a global outbreak like that, unless it's ransomware that is actually affecting people, like WannaCry did, it's generally you can deal with it and it's confirming that you have not been hacked. As with Solarwinds, most people had the problem, but it didn't materialize into an actual breach. So it's about confirming that they're safe to proceed and they haven't lost data.
The next question reads, you mentioned a 14% investment in R&D. How is this being used to enhance development your proprietary AI software?
Yeah, so the artificial intelligence is a really important portion of that R&D. And I said before, we also develop internal systems and the underlying platform. The latest area that we're researching, and this is research as in it's a long way from releasing a service and a product, but we're doing a lot of research in neural networks, which is an interesting branch of artificial intelligence that uses computers to mimic the way the human brain works. And one of the interesting areas of neural networks is that it allows computers to learn, and you don't really know how it's learned. So you're not giving it rules and logic and saying do this, this, and this. You're saying here's some data. Can you learn what happens with that data to turn into this output? So it's an interesting area of development, but we're always looking ahead at new things that we can do to streamline the process. And as you can see, we're dealing with large volumes of data that you cannot process manually. So we need that automation to do that first stage of the processing.
Thank you, Ian. Thank you very much. Again, I know you talked about the partner program, looking up for 200 partners. The question reads, that was pre-submitted, could you provide some more detail regarding the partner program and the company's strategy to develop it?
So that, as I said, we had a two successful. And now it's about getting more value from those partners. So particularly letting them do more selling and enabling and supporting them and training them. A lot of companies move into cybersecurity and find it's not as easy as they thought. There's a big market and people need it, but selling it can be at times tricky. And you have to learn a lot of lessons to effectively sell it. You don't get a 70+% conversion from proposals to sales without learning a lot of lessons through the years of how to do that. And our job is to help partners on that journey and help them tap into that market, because most of them they've got IT customers. So they're selling IT software, hardware, some managed services. They know those people have a need for cybersecurity, and we're a great trusted partner to help service that. And it allows us as well to build on their relationship. They often have a good trusted relationship with those clients, and we can build on the back of that and be the trusted partner. And the feedback is very positive. So that's a key area for us to grow.
Thank you very much, Ian. 3 final questions here on the pre-submitted side. Does the company plan to make any acquisitions, or does it see sufficient organic growth opportunities? Can we expect to see further consolidation in the cybersecurity industry?
I think you will see further consolidation. Yep. I think that the fact that we have approaches every month shows that there's lots of people out there looking to invest in cybersecurity. For us, I think there's 2 factors really. There is dilution. So at the current share price being so depressed, it doesn't make sense from a dilution perspective. And you've got a high level of ownership with the directors and the management team. So we won't do acquisitions unless we think we're going to generate real shareholder value. And then you look at what would we buy. So we could buy a consultancy type operation. Difficult to ensure that you retain the value there, because typically some of the key consultants might leave as part of the acquisition. And Lucy leads our recruitment, and we're very successful at recruiting good people. And our retention ratio, tell me the number, Lucy, but I believe it's over 90%.
Sorry, yeah, it's 98% at the moment.
And typically we have a 90+% retention ratio. So we are good at recruiting and retaining people. And don't have difficulty, even though it's a difficult market for cybersecurity people, we find it easy to recruit people, relatively easy. And then technologies, if there was a technology gap in what we were doing, we would be developing it. So we're not reliant on buying technologies. So a lot of companies need acquisitions and therefore shareholder dilution to grow. We don't need that. We're in a nice position that we can grow organically. And for us, roughly, depending on the service mix, but profit tends to equate to cash. So as we're now profitable again, then we tend to be cash generative. So we don't need to do acquisitions. We don't need to raise funds. So that's our position on acquisitions.
Well, I think that addresses the next question, which was, does the company have any plans to raise funds in the near to mid-term? I think you've just very kindly touched on that. And then the final question, I guess, is how are your recruitment activities progressing now that they have been reassumed?
I'll let Lucy answer that, because she leads all our recruitment.
Yeah, very well. We're recruiting all across the business, from just about all departments, in anticipation for this year's growth. And one of the questions that else has come in is, are all our people Bradford based? No, they're not. A lot are, but our consultants are based all over the country, because they're working from home and from client sites. And the vast majority of our salespeople are all around the country as well. So we're not tied to the Bradford office. We also have staff in Australia as well, of course.
Okay.
Ian, that does address all the pre-submitted questions. I'm sorry, because I'm sure you can see there's a number of other questions that have also come in. Perhaps I could ask you to continue, if you would be so kind, if you can give us time, just to perhaps read out the questions and a response where it's appropriate to do so. Thank you.
So the first one is, do you foresee any changes in the UK market as a result of Brexit? Sorry, I can't see the name of the person who asked that because it's just gone off the screen. But really, Brexit hasn't really affected us. Our clients are predominantly UK based. We've worked in over 30 countries, but we market in the UK and our clients tend to be based in the UK. Or we might work for an international company and we start in the UK and then they take us abroad. But there's nothing particularly with the changes as a result of Brexit that would affect us. If Brexit results in declining activity in a given sector, then that could affect us, but we're not seeing that. And I think the economic impact of COVID at the moment looks to be more than the economic impact of Brexit. So it's not really an issue for us. Then David said, do you see a need to expand into other geographies in order to service larger clients? We don't see the need to move into other geographies, but we have worked in many countries. And now that we've got the 24/7 facility in Australia, and we can do things on a global basis, I think that's a good option for us in the future. So things like managed services, we can manage things anywhere in the world. We're already doing it 24/7, so that could scale into other geographies. So that's a possibility for us, but we don't need to do it in order to service larger clients. And how is the current percentage market penetration for the solutions you offer in the UK? Well, I think I covered that on the market is into the billions and we're into the millions. So the size of the market is not a limiting factor for us. So the key thing for us is to keep operating in that real value space where people are buying based on quality and value and not based on cost. So with such a diverse market and lots of new entrants and variable quality, there is always going to be people who will sell things cheap. And we don't compete in that area. So, for example, if you go back 10 years ago, we had a very, very effective technical system that actually had some artificial intelligence that we've brought forward into detection services, but we had a very effective solution for filtering emails for spam. And it was a managed service, some very, very clever technologies. And we were able to achieve a level of accuracy that was just way better than anybody else was doing. But it became a commoditized market, and people got used to having a little bit of spam. They didn't mind. And the difference between 98% effective, 95%, 98% effective, and 99.99% effective, as we were, didn't mean anything. It became commoditized. People were buying the lowest cost solution. We moved out of that. That's not of interest to us. So even though we had a very effective solution, the market weren't interested in something so good. So we're always looking at where are the higher value services, where we can do the most good for a client, generate the best relationship with the client, give them the most benefits. And that tends to lead us into the technologically complex areas, difficult challenges, but where we offer the most value. And that's achievable in such a large market when we've got experience and the diverse client base and the reputation that we can carve out that more profitable niches.
Ian, I think you have been very generous. I think you've answered every single question that has come across the either the live event or pre-submitted. So thank you to yourself and Lucy and Gemma as well for the presentation today. Perhaps, I know obviously investor feedback is important, and we will shortly redirect investors to provide that for you. But perhaps, Ian, I could ask for a few closing remarks just to wrap up, and then, as I say, I would divert investors for feedback.
Okay, thank you very much, Mark. Yeah, I'd like to thank the team, because it was a real team effort last year, and there were lots of challenges for people personally and in business. I think everybody performed admirably. So I'm really proud of the results that we got. And thank you for investors for attending and showing an interest in what we do. And hopefully we'll see you as well in some face-to-face things again as we proceed. And particularly people who ask questions. Always great to ask lots of questions, and we like to get that feedback and see the areas that you're interested in. So thank you very much for everybody.
Ian, thank you very much indeed. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, the feedback page will appear. But if you access this meeting via the link sent to you by email, you'll be asked to log back in and provide your feedback, and we'd be very grateful if you could do that for the company. On behalf of ECSC Group, I'd like to thank you all for attending today's presentation. That now concludes today's session. Good afternoon to you all.